Investors love EIS and SEIS. These are both venture capital schemes that help UK startups secure the cash they need by offering investors pretty incredible tax reliefs. In this video, I'm going to talk about EIS, but if your company is less than 3 years old, you might want to check out my other video on SEIS first. EIS stands for Enterprise Investment Scheme. With this, you can raise up to £12 million in your company's lifetime, capped at £5 million a year. You can raise even more money if your company qualifies as a KIC, a knowledge-intensive company, but I'll cover that in a separate video. Investors love EIS because they can claim income tax relief on up to 30% of their original investment, though the max that they can claim back on is £1 million or potentially £2 million if at least half of that investment is in KICs. Then there's capital gains tax. Here we're talking disposal relief, meaning that if they hold on to their EIS shares for at least 3 years, they'll pay no CGT on the gains. And deferral relief, meaning that if they've disposed of another asset, so maybe sold a property or a business that would usually give rise to a chargeable gain, they may be able to defer any CGT they owe if they reinvest in an EIS eligible business. But that's not all. If things don't go to plan and the business fails, the investor can offset their loss against either their capital gains tax bill or their income tax bill, whichever suits them. Let me run you through a quick example. An investor has put 100K into your startup. They can claim 30% income tax relief. That means only 70K of their capital is actually at risk. If the company goes into liquidation, assuming they paid a higher rate of income tax at 40%, loss relief will be worth 40% of 70K, which is 28 grand. So here's how you go about getting investment under EIS. Step 1, check you're eligible. Generally speaking, if your company has a permanent establishment in the UK, has been trading for less than 7 years, is not listed on a recognised stock exchange, has fewer than 250 full-time employees, and gross assets below the value of £15 million, it's probably eligible for EIS. There's a bit more to it than that, like rules around subsidiaries, but that should give you an idea. Go to our website and take the quiz, as that goes into the nitty-gritty. I'm just here to give you an overview. Step 2, find investors. If you haven't got someone in your mind already, watch my other video, How Can I Find Investors for My Startup, for some top tips. You'll need to have the name of a potential investor to proceed with step 3. Apply for advanced assurance. Advanced assurance is a no-brainer. It's not compulsory, but you'd be crazy not to. Advanced assurance is a bit like getting a mortgage in principle. It gives the lender, in this case an investor, peace of mind that their investment will qualify for EIS tax relief. You can apply for advanced assurance easily on the Vested app. Once you've got the green light from HMRC, it's time for step 4. Get organised. Funding rounds involve a lot of admin. It's not fun, but you have to get it done. With Invested Raise, you can access the business and legal docs you need, put everything in a secure data room, which you can give your investor access to, model future scenarios, issue shares to investors instantly, and much more, so do check that out. In the meantime, I hope you found this video on EIS helpful. If you're interested in SEIS, check out my other video. I've included links to resources I think you'll find helpful in the description. Don't forget to like and subscribe for more startup content.